Welcome to Cut to the Chase. Today is Wednesday, the 15th of January. I'm Daniel Lam, your host for the podcast. Recently, we've been talking about US exceptionalism, from Trump's policy tailwinds, as well as the recent outperformance of US macro data. Now, there is another driver at play, which is the US fourth quarter earnings season, which will kick off with major US banks reporting, starting from Asian time later tonight. The S&P 500's fourth quarter earnings growth is expected to be 9.6% year over year, up from the third quarter at 9.1%, and with further acceleration in the quarters ahead at roughly 12 to 13% growth. We will watch for any signs of consumer weakness, impact of the Fed's rate cutting cycle, and ongoing investments into AI. Now, within AI, we have noticed that investors have begun to favor services or infrastructure providers over the aggregate technology providers due to the concerns on increasing costs that the latter may incur. It would be interesting to see the corporate guidance as well as the investors' reactions in this fourth quarter earnings. Now, the consensus expectation is for 2025 earnings growth to be at 14%, up from the 2024 earnings growth at 10.1%. All the sectors are expected to deliver positive earnings growth in 2025, led by technology, up 20.4%. The strong earnings growth underpins our expectations for US equities to outperform global equities, and therefore supporting the thesis of US exceptionalism. Our preferred US sectors over the next 6 to 12 months are technology, communication services, and financials. Technology's leading earnings growth is attractive, with growth likely led by AI applications and investments. Communication services also enjoy strong growth via online entertainment and reasonable valuations. Lastly, financials should be boosted by the regulatory tailwinds. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.